Welcome to the Morningstar Manager Checkup. I'm Holly Black. With me is John Miller. He's Head of Manager Research at Morningstar. Hello.
Hi, Holly.
So you're back again to give us 3 ratings updates on some funds you've been looking at lately. Where would you like to start?
Let's start going into China, which has actually been a very good performing market this year, and more specifically the JPMorgan China Opportunity iShares Fund. So iShares meaning it's a particular part of the market in China, domestic focused, and for here there's a lot of due diligence that needs to be done around companies based on corporate governance and such like. And we think the team at JPM are very strong in this space. The managers took on this fund about 3 years ago. They run a wider China equity fund. So, 3 years down the line now, we've looked more in depth around their process and their stock selection, and it's really come through in leaps and bounds. Overall, we've taken that fund from neutral to silver.
That's quite the upgrade. Do you often jump funds up by 2 rungs rather than just 1?
It can happen from time to time. There's no real prescribed reason. But I think what we wanted to see here from maybe the previous couple of years was also the fact that, with such a high growth market, you can just hit a couple of home runs potentially and do really well. But it's the depth of work across the board that stood out for us. And that means that we have an above average view on people, an above average view on process, and we like the house as well. So when you bring that all together in a market where you can outperform quite strongly, that's helped take the rating up to silver.
Okay, on to fund number 2.
So here we're going for SRI funds, so social responsible investing, and this is a tracker fund, so a passive in the emerging market space. So iShares, MSCI Emerging Markets, SRI. So as I said, it's an ETF, so you can trade it like a stock on the market. And here, there's certain rules around what's in place around the strategy here. And what it does is it looks at MSCI's work on sustainability, some controversies, and screens out some stocks and looks at the top 25% of stocks in the emerging market space through the lens of which they come through, and also excludes fossil fuels. We've taken this from neutral to bronze, and we think it's a process that takes out those key parts with people looking for some sort of sustainability SRI type approach. It's got rules because it's a passive for what it excludes, and all told, fees are very cheap here in the 25 basis point mark.
Now, when you're assigning these ratings on an active fund, meeting the manager is a crucial part of that process. So how does that change the way you ascribe a rating when you are looking at a tracker that effectively doesn't have a manager?
A key part here is around the representation of the index, so how wide and breadth you get from investing. Here, there is some elements that are taken out because of the ESG element, the SRI element that we've talked about. So you get a decent representation where it's the whole of the market, and we think it's well structured. You could get a high on the process part. Here it's ended up as above average because there's a few bits taken out, but the elements that bring in the SRI we think do have some positives. Okay,
and what is our final fund?
So our final fund is a bond fund, a PIMCO Total Return. So PIMCO is a very well resourced fixed income house. We think highly of the people there. The managers in place, the likes of Scott Mather, Mark Kissel, these are seasoned investors in the fixed income space. This fund looks at you can kind of look at it as a bit of a best ideas across the board. And this is a fund that used to be run by a well-known manager called Bill Gross, who had a very strong run and left PIMCO about 5 or so years ago. Since then, these managers have carried on from where he left off, so some really strong performance in different markets. I mean, no one could have predicted the COVID virus, but when you take those elements into account, being able to profit from falling government bond yields as well as a bit less risk on the table than peers, that stood them quite well in the first quarter. So, as I said, no one could have predicted that, but we think the process and the people in place have got some positive attributes here, and silver is a strong rating for our view here.
John, thank you so much for your time. For Morningstar, I'm Holly Black.